Welcome and thank you for joining the first episode of our 21Shares State of Crypto Weekly webinar. We hope that you're all safe and sound. And given the current situation, where most of us are working from home, we thought we still want to engage with our community and with you, despite all of those events being prohibited. So that's why we're doing these webinars live. And they consist of two short presentations. The first one is a general market update, with a particular focus on the effect of the current economic situation on the crypto markets. This will be given by Mr. Davide Vicini, who is a senior associate here at 21Shares. And in the second part, we choose one topic within the crypto asset industry every week, and we do a short explainer. And today, our lead researcher, Mr. Lanre Ige, will be explaining the upcoming Bitcoin halving, which is just around the corner.
Thank you, Hans, and thanks all of you to participate. I see it's a very good number of participants, so let's just get started. On my section will be 10 minutes every week, every webinar, speaking about the market, giving you an overview on what happened, what is happening, and what we should expect. So by starting here, we see the price of last week, the capitalization of last week, Bitcoin and BSV, they were slightly negative, while Ripple surprisingly headed towards the plus 10% over the past week. Interestingly about this slide is that we see that this week, the Bitcoin trading activity, it was more bullish than bearish. 65% of Coinbase traders were on the buy side of the Bitcoin. And another interesting fact is that the average holding time for the trader is 94 days, while in financial markets, it's around 40% of the time. So around 30 to 40 days. So we see a very bullish and conservative from the number of days of holding the position point of view rather than the financial market. Going to the next slide, this is what we all are speaking about on the last weeks, on the last month, how from a qualitative point of view, the Corona news affected Bitcoin price, affected the whole financial market. So we can clearly see from this graph that from last days of February, when Italy took measures on all the country and the global infection were over 80,000 cases, financial market few days after start collapsing as the cases increases. On 3-4 days ago, we reached 500,000 cases. Boris Johnson tested positive, and the market yesterday, again, they went down, and we're still on the downside of the markets. Going further, now, let's see in details what discussed above about the trading approach and the qualitative news that are affecting financials market and crypto market. We saw that during this crisis, traders on financial side and crypto side, they all ran for cash positions. And we can see these from the main indexes from our side of the world. And we see the S&P, these are all capitalization of the indexes taken, the image taken from the 1st January 2020 and 1st April 2020. And we see how much wealth was destroyed and how much people are willing to sell the position to get to cash. Interestingly, Bitcoin capitalization decreased -7%, while S&P -24%. The DAX capitalization decreased by 28%. It was with the FTSE capitalization were the highest loss of value. And Bitcoin still a good conservative approach, as we see that price moved not that much and capitalization still in place. So we have a lot of money inside Bitcoin market. Going further, we also analyzed how correlation changed. And we divided the correlation into 1 year, 1 month, and a week to have a clearer picture from 1 year correlation, which are normal market, everybody are happy trading, standard deviation is pretty normal. And in the last week, we just saw an increasingly downwards of prices and volatility as well in the market. So the main aspect that we focus here is to see where correlation has changed positively or negatively, but on a big scale. So we see the correlation with Brent in 1 year scale versus Bitcoin. It was slightly positive. Now it changed on the opposite direction very aggressively. It's a very aggressive negative correlation. On the S&P as well, it was positive, and it changed on more positive correlations. Interestingly, two indexes from emerging countries as Russia increased correlations, and India just decreased correlation to arrive to a quasi-zero correlation. This means it can mean that emerging markets and currencies are searching to hedge their volatility into Bitcoin, and either speculators on the oil and S&P traders, they were searching more correlation versus Bitcoin. Ultimately, on the next slide, we are analyzing what happened the last month, and particularly the last week on the market, and either last night, because we saw a very huge increase during the last night of $300, $400 per Bitcoin. Giving a technical analysis point of view, we saw a minimum of 4,800 and a maximum next to 10,000 on the last month. And we see that the trading range for the past week was shifting between 5.5K to 6.5K. We believe there is a support and resistance level, as you see from the graph, at 7,500 resistant and support at 5,000. What happened yesterday? It's during the night, sorry, so today during the night, the price increase mainly due to margin calls of 65 million short positions on BitMEX. So happens, price increase, margin call accounts were forced to buy back Bitcoin, so we saw a price increase during the night. This is everything from this week from the markets.